Hey guys, before we get started, I've got a quick favor to ask. I need you to like, subscribe, and share this podcast if you feel you're getting value from it. That's how we're going to get these conversations in front of more people. And just as important, if not more important, is your feedback. The good, the bad, the ugly. I want the critical information on how we can make this podcast better for you and deliver value every time. And if you know somebody in Louisiana who's doing big things in their field, industry, or business, please drop their name in the comments. We'd love to have the opportunity to bring them on the show. At the end of the day, this is all about the youth of Louisiana and putting local leaders in front of them and giving them something real to learn from. Now let's get it. What's up, everybody? It's your host, Matthew Pierce, for the For Profit Podcast, and we have the privilege and the honor of having yet another guest, one of my very close friends, Mr. Troy Aucoin. Troy is an independent financial advisor who went from an employee-based firm to the entrepreneurial path. He has the privilege to serve over 300 families and business owners here in the Baton Rouge area. And like me, he has humble beginnings starting here in a small town in Louisiana, Donaldsonville, my hometown. I'm going to turn it over to him, and he's going to tell us a little bit about himself and his upbringing, and we're going to provide a ton of value to our listeners today. So, Troy, why don't you take it from there?
All right, Matthew, thanks for having me. Really pleasure and honor in being here and being able to share hopefully some important insights of some of my path. And as Matthew mentioned, being from Donaldsonville, growing up on Bayou Lafourche, created I think some strong roots in myself personally, but also a lot of things in business. And I make a joke to my wife about how all roads lead to Donaldsonville, and it's incredible and how many people, almost no matter where you're at, there's some way, shape, or form, somebody knows somebody there. And I think that's a lot with my upbringing. I was fortunate in 1992 to be part of the state championship team for Ascension Catholic, who is, I guess, my high school alma mater and runs deep in my core of a lot of the lessons and values that I learned. My dad coached there, my mom taught there, so a lot of things went from there. And I'll tell you, with them being in their teaching background and my daddy being in banking, it led me into this path of being a financial advisor.
Yes, indeed. Now, me and you have a very interesting connection. You were influenced by
we can't put all of that on video, Matthew.
No. This is wholesome. So you were influenced by a lady in your religion classes in high school. Who was that lady?
Well, yeah, Miss Pierce.
Miss Carol Pierce.
Miss Carol Pierce, exactly.
Yeah, you were a senior in '92.
That's graduated in '93, and she taught me in religion class. I if I'm not mistaken, sophomore, junior, senior year.
And I was a baby at that time. I was born in '91, so you saw young Matthew from the very beginning. So he has known me essentially all of my life.
Oh, yeah, exactly right. And I can't remember the exact day or time. I know it was around 2016, 2017. We knew each other, of course, and who we were, but we had a moment at one of our special places and under the overpass at my favorite areas in Baton Rouge and Ivors, and I think we chatted that night over a couple of Michelob Ultras, maybe a vodka or two, and established one heck of a really good friendship from that point.
Many years ago. Since then, as my audience knows, I've put down the alcohol. I'm coming up now on 2 years sober, no alcohol, no nicotine. I still enjoy a nice cigar every once in a while, but no, it's so funny how, life brings people back together. I know our families have known each other our entire lives. And when I moved to Baton Rouge, it was right around 2016, 2017, and I was looking to develop relationships from people in the city. It was somewhere where I didn't know many people, and stumbled into Ivars one day, and
here we are.
He said, "Look at little Pierce, look at little Pierce," and now here we are today.
I think it was Young Matthew.
Young Matthew, that's what
I
he loves.
Probably have you in my phone as Young Matthew.
Yes, indeed. So let's get back to your upbringing. Being from Donaldsonville, talk a little bit about some of the things, the people, the experiences that influenced you, that kind of gave you some of your core values or guiding principles. Anything that comes to mind with that?
No, good question, and a lot. Obviously, starts a lot with a lot of us is with parents, and you get those examples, and you build up, values, and as I mentioned, roots, and those sort of things. And it's things that stick. It's things that I think you take on in your life, and then you bring that into a career, which is what I really love about the business that I'm blessed to be in. To tell you what got me into the employee firm that I was with was they had a branch office in Donaldsonville,
Yeah.
and the lady had very good relationship with my father, and she knew myself. One little side note: I have an identical twin, Chad, who's also in the financial services businesses. I doubt you'll ever get him in his studio or even want him to, but that's okay. But but no, so we're both financial advisors, and so I think that sort of influences of seeing and watching people who in my mind was successful, and you see those people, and you want to make good decisions to try to be that way, and grow, and then to be able to build something. And I feel like that is a lot of what has driven me to where I'm at today, was just wanting to build something that you can look back and have some be able to see your success, I guess,
Yeah.
and I think that was a lot of driving forces for me.
Yeah. So you mentioned your father was in banking. Was he a mortgage
He was
loan officer?
loan officer at First American Bank. He just retired this year, actually, after
Okay.
45 years.
Let's go.
He brought all his rollover to me, not my identical twin. Just I don't know what we might want to say. I think that's a big thing for me. But,
Yes, indeed. Yes,
So
indeed.
yeah, and then my mom was in teaching. Was a teacher, worked into the Ascension Parish School Board. So I feel like you put those two together. I love teaching people about finances. I love teaching the people about how money works, because it's a subject that, in my opinion, should be taught a little more, even in schools.
Yeah,
You know.
absolutely, absolutely. So what's one thing that your mother always said to you growing up that has stuck with you? Maybe a phrase, an idea, a principle. What?
Certainly. It was always shake hands with the men and hug the old ladies.
Yeah,
And I still do it today.
just that
And
hospitality and making people
exactly,
feel good.
make them feel good. Treat them like family. I treat a lot of all my clients. If my parents were seeing a financial advisor, what would I do? What would I want that advisor to do?
Okay. So
That's pretty much the principle that, in making decisions, a gentleman who I was fortunate to train under told me also. He said, if you never worry about your commissions, and you never worry about how much you're going to make in doing something, you're going to be totally successful, and you'll never have to worry about it. And
yeah,
I've kind of took those principles of, the old adage of doing the right thing. And I mean, that's easy as said. A lot of people don't do it, and unfortunately, as wealth management, as a financial advisor, as a lot of different in our industry of helping others, you get stereotypes sometimes of people who maybe don't make those decisions like they should.
yeah. Maybe people who are pushing more high commission products as opposed to products that fit the
That's right.
clientele.
What was better for them to sell it versus did it really fit this client?
Absolutely.
Now, the industry has changed a lot, which I'm really glad about. It's taken some of that away. I think that that's best,
Yeah.
because it aligns you as a financial advisor to make the right decision. It aligns the client. And really, a lot in our industry today is, there's a lot of commission-based products are not even available,
Yeah.
which I'm totally
I'd be willing to bet that employee-based firm probably pushed a lot of those products or incentivized you in certain ways. And
definitely.
I know if you'd like to get into that at some point during this podcast, I mean, that could kind of give you the ick. I had been a part of a company
Right.
that was saying one thing, doing another. And I was looking to serve my people. I was looking to educate my people and worry more about fit.
True.
Whereas the company is like, hey, we're this brand.
Yes.
Push the brand, push the
Do
product.
this.
Yeah.
We were talking a little bit about cooking earlier. It's like, if you're a chef in the kitchen, you get to create your meal. But if you have somebody like the employee base side that says, hey, Matthew, you got to cook this today, or you can't use that knife, or you can't use this. But then,
Or here are the ingredients. This is all you can
yeah,
utilize.
correct. And then they're going to go deliver that to you and say, well, here's what I cooked you today. But no, it was all of this, set up stuff in there. And I think, you use the word control, and I know these firms have to protect certain things, but they forget about the client. And it's, to me, the easiest part in anything, not just financial.
We're all here to serve.
You're here to serve.
Yeah.
You're here to help. Yeah, walk away. Somebody's got to walk away and see value in what you do. That's the biggest thing that I'll say. I was able to grow my business from those principles right there. And by doing the right things, I'll get more referrals from that. My clients, I look at this as I'm a relationship manager of doing what's right.
Oh, I love that. That was a nugget. A relationship manager of doing what's right. Take that, audience. So, we talked about your sweet old mother. She gave you some great tips and tricks, or not
Definitely.
tricks, but things to live by.
Yeah.
What's something, old Raymond? What did he teach you? What?
I tell you, a lot was the mechanics of our business of making money work, respecting it, even though it is our business, and it never shuts off in my world because I've got personal goals, I've got personal things, I worry. That's why I got all this gray hair. At least I still got some. But you tend in this world after 25 years. I'm going into my 25th year, and it's the true things of money never stops. It doesn't. It never stops in my head, and it's always moving.
Yeah.
So my dad taught me a lot of the mechanics of that. He taught me not wasn't just go buy a CD at the bank. It was why is that CD there? What is the bank doing with it, and what it did for you? So, then as I've learned more into now the financial markets, the equity markets, the bond markets, and how all of these things start to work, it really put me in a position to relate to clients in a very easy way, and then put these values and the right products
The
that they
right
need,
mix.
right mix of
Creating the
things
right
that they
mix, the
needed,
recipe.
solving their issues, solving their.
So what's something that he always told you growing up? Whether you were doing good or you were in trouble. I know you and Chad, y'all got after it a little bit. Give me something, Troy.
Yeah, no, it was really just being a responsible young man as much as being a responsible adult.
Yeah.
And anything you said was somebody was taking that as gold, if you will, where they were the things you said and the things you did was always going to be watched somehow. So how did you want tomorrow to look for what you were doing today? You know.
Okay. All
So
right. So that was
fortunately, he didn't see all of it, but
you something else, boy. You something else. So, yeah, let's talk a little bit about the industry. Let's get back to some industry. You said there used to be maybe a negative outlook or,
right. Stereotype of
stereotype. So, talk a little bit about that. Talk a little bit about transitioning from employee-based firm
certainly.
to being an entrepreneur, being an independent wealth advisor, and helping others to grow their businesses.
Yeah, definitely. And I can go back to 2001 range of, even then you did not have the information that we all have today. I mean, we could by the end of this video have an brokerage account open and bought and buy a stock by the time we're done.
Yeah.
Back in the day, you had to go through some sort of firm, and you had the big firms back in the day. I mean, some of them are still around, some of them have changed a lot, but everything was about commission. They sold a product and walked away, and nothing against car salesmen, right? Or nothing against car sales because we need it. But how many of them call you? How many of them you see? I don't think I've bought multiple vehicles from the same person in, I'm 50
No,
now.
that's I just got back from New Orleans. I spent the week in New Orleans, and that was a big thing that we talked about on my real estate side of things, and how many clients hear back from their realtor after a transaction. Over
Interesting.
90% don't ever follow up, not one single time.
Interesting.
Yeah.
I think a lot of the industries were like that, and especially in mine because it was a solar product, and the car drove off, right? Well, so did the paperwork, and it was gone, and it was out of sight at that point. And things were based on how much sales you can make, and accolades were coming out on this person did this person did that. It sometime bred the wrong competition, if you will.
Yeah.
And I feel like I will say this. I think you were only able to do what you could, so a lot of advisors were maybe limited into that, and it brought some things that shouldn't have been done. A lot in the insurance based annuity side, there's a lot of specific products that had a lot of challenges, and that's what I guess part of what I mean is as far as things of the stereotype was these bad products that unfortunately somebody had, and it did nothing for them. It only did something for the advisor or by the firm. And after a while, you go into an industry, and I was young. I mean, I was 25 at the time. I'm 50 now. You had to listen, you had to learn, you had to get your training, and you went out and you did the best you could with what you had. And I guess as you get older And then you get older and further down in a career path, you start learning and you see more things. Maybe you're blinded a little bit, and then it opens up as you get, more of your knowledge. And I didn't want to be the chef in the kitchen who only had these ingredients. I wanted to go talk to you and see what you needed. Then I'll go in the back and cook it. If we're using that as an analogy,
Yeah.
in this case,
I love that analogy
well,
because you and your wife love to
oh, we
host, y'all
definitely
love to
cook.
cook,
Yeah,
and you love to cook. So
definitely tailgates, you name it. I'm
yeah,
in. That's my wheelhouse.
he's the
So
party man.
yeah.
I know a lot of financial advisors. I don't know many who throw better client appreciation days than you. I've been to several of yours.
Thank you.
When you were at the old place, I've been to the ones at the new place.
Yeah.
And Troy, you make almost all, if not all, of your decisions based on the client. Like, I've seen you spare no expense when it comes to a client appreciation event, or when you built out that new office
Yeah.
and how you wanted to make the clients feel when they came into your building. And so I
Right.
know you put them
Yeah.
first.
Well, I mean, and that's it. And you hear that. I'm sure we've all heard it of, people remember how they felt when talking to you versus even a lot of time of what you said.
Yeah.
And I mean, I've, kind of so many ways took that approach, but it's always driven me to, be that person that they would, I wanted them to be at a barbecue or a crawfish ball, LSU game and go, man, my financial advisor's doing this, or my guy said this, go see him. And that 90% of my new clients today are referrals.
Yeah.
And we try to work within families, and that only goes by one principle. And again, I mean, we hit it a few times here, doing what's right, but that's pretty much
Yeah.
really what you could boil all this down to. And in any industry, not just mine, all of them.
Yes, indeed. So, what did it look like when you transitioned? Tell us about that process. Was it stressful? We got a lot of people who may be watching this who are looking to take away some nuggets, maybe understanding the mindset that they have to have when taking that leap of faith. What are some of the things that you faced, the adversities that you had to overcome, staying motivated, staying locked in? Talk about that transition.
Sure, thanks. Yeah, no, it is. It's a very stressful time, and I could speak to me personally of having 19 and a half, almost 20 years in one spot, in one place. I mean, to the fact of you had such great muscle memory to work the mouse, you didn't even have to look where you were going. I mean, down to those principles to make a trade or send money, whatever that may be. Non-solicitations were in place, and in an employee-based side, those firms own your clients. And so not only can they tell you how and what you have to serve, the fact that if you wanting to try to go and do something better for your clients or better for yourself, then you got to go to a battle. And it was a battle. And I could tell you, it was like putting the shoulder pads and helmets back on, right?
Yeah.
Because it was going to be a battle. They were trying to get what I had built. I wanted to not take, I mean, it was it. I just wanted to
Service those people, continue
service,
to keep those relationships.
adjust the model. I wanted to adjust the model. Now I've been able to get to a point of we operate on three things, and it's creating, managing, and protecting wealth. One of your questions we talked about was what to sum up what I do, I create, manage, and protect wealth. Not that I couldn't do it at my other place, I can't do it as well as what I did to do today. And so we've now built out every facet of a person's life when it comes to financials, insurance, growing money, saving money on taxes, tax mitigation strategies, you name it. We could talk about 15 of them today.
Well, it's funny. So me and Troy, we work very closely in my my health insurance business. We've helped clients transition who are looking to retire early to find affordable health insurance coverage. I believe
Extremely well.
the employee-based firm does not allow for you to pass referrals.
You couldn't
or
come in the
I
office.
couldn't even come into the office to
Yeah.
discuss or sit down with a client. That was a huge no-no, and for the record, we did not do that. And so that was very difficult. And that was one of the things that you knew people in other industries who you trusted, some would say with your life, driven you around many a times. But,
Yes.
and you couldn't freely refer them.
No.
You couldn't have them come into the office and make a warm introduction.
Correct.
And
And
how is that based on relationships? And that was one of the handicaps.
It's the mindset of, somebody's in some home office somewhere and they're trying to tell you how to, run your business, so to speak, or how to even sit with you and make an assessment of what you need. I'd rather send you with a trust and relationship.
And how different is how we do business here in Louisiana? If for those of you who don't
Extremely.
know, who aren't from Louisiana, who are
Yeah.
listening, we have a unique style of business. It is definitely relationship based. It's, how's your mom and them? Like,
right.
come in for a hug, a warm hug. It's hey, I'm gonna put you in with a guy who's done great for me for years. And we think about our people first. Where some of these big corporate companies, it's about the strict rule process, and business is transacted in a different way in different areas, but you have to follow this set way.
Always. I mean, and we're on the front line of shaking the hands and hugging the old ladies, and we're on the front line sitting with them, and we hear the ups, we hear the downs, we see the downs. How many people I've seen so many work their lives, and just 3 years, less than 3. I've seen some less than a year pass away after working their entire lives. And that's what I don't feel like the back office. Again, I'm speaking about my firm, my career, my industry, how the back office people doesn't see that. They don't see that face to face, the eye to eye. They're almost looking at the textbook where we're working into the reality. So, a lot of my motivation, and if some of you out there, some of our listeners here are looking to make some changes, I would tell you, don't wait. I should have did it 10 years ago.
Yeah, you waited 20 years.
I waited 20. I should have did it in year 10. I was worried. I mean, it was something that was on my mind, but you know.
So how did you overcome that? Talk
question.
about that.
Yeah,
Dive
no.
into that.
I went down and really had some deep soul searching of what I wanted to accomplish for others. And I said, all right, I knew the stress level was going to be here. I knew the battle was going to be way up here for a while. I knew that was going to be a temporary. So kind of like when you trained for your Ironman, right? You probably had to just really bust it in training. And I mean, I'm correct me here, but probably the day of was maybe a little easier than some of the training because you finally there.
Yeah.
And I think that was what part of my mindset was, all right, here we go. I mean, I can't do an Ironman, but I was like, here we go. Here's gonna be Troy's little marathon.
Yeah.
But yeah, stresses were high, but I kept my eye on the ball, kept my eye on the prize, if you will, was to get to this other side. And then I was going to be able to now, create this wealth management firm that I finally have today of creating, managing, and protecting wealth for people. And that's everything from stocks and bonds to cash to checking accounts to estates to CPA work, you name it. I'm pretty much involved in, I would say, almost 90% of people's financial lives.
Yeah.
And so knowing that, and knowing that I was able to build something that now today,
that big why, that was the why behind
that was the big, and then now I got something that has a valuation. Now I'm a business owner. I mean, I picked up some major for me and my family, which is a big motivation as well. There's been a lot of great tax strategies I've been able to do. Just use the tax codes. They're there. I didn't make any of them up. If I made them up, it'd be zero. But I don't know. But I try to get to that point. But that was the things I wanted to be able to be. And one thing I took pride in of being in this industry, I always felt that, I kind of almost have my hand in our economy. I have our hand in the stock market. And that has always just been one of the coolest things for me to, I showed a guy the other day, we put 11,000 in a certain company. It's now worth 92, and that's been less than 2 years. Now we hit some home runs, but to be able to go tell somebody that is just, to me, the most exciting thing in my career, because when I point that out to that gentleman, I know he's going to be at Christmas this year bragging about that. So hopefully his uncle or aunts or somebody calls me up and hey, we try to find another one. But that's the fun thing about this industry. And you mentioned about helping people retire early. We excuse me, we got them time back. That's another thing. You get somebody retired 2 years early, and you've helped me do it.
Yeah.
We gave them time.
Yeah.
And you can't even buy
time.
it. How do we buy time?
You can't buy time. No. And
so, I mean, if we could do that, I think we accomplished something huge.
Yeah, definitely. I just think about all the clients that we've helped and open up their eyes to, everybody says health insurance is going to be one of the highest costs in retirement, which it can be if you're not working with the right people, if your financial advisor doesn't have a team of other trusted advisors.
Good point.
And so we've been able to just, kind of tag team. Hey,
Yeah.
get in the ring now, Matt. Handle this side of the equation. And so that's been
That
great.
lasts. I mean, that's things that last. That is things that makes a difference for people, in their lives. So yeah. I mean,
Yeah,
it's
getting time, buying time back.
buying it back, and it's
Buying it
hard to
back.
buy. I mean, the one commodity none of us, doesn't matter how much money you got,
Yeah.
you're never buying time.
Absolutely.
I mean, you can with that book you gave me, which was
Yeah.
awesome. By the way. We got to plug that book.
We got to plug
Buy
that book.
back your time.
Yeah,
No, it's
Dan
phenomenal.
Martell, Buy Back Your Time.
You
Excellent
sent
read.
it. It's been a game changer for me, honestly.
Absolutely.
That's another thing that's really been helpful too, man.
So look, I know you've been in business for yourself for several years now, and I know you work with other business owners. What are some of the financial pitfalls that you may see with entrepreneurs or even a young upstart couple in the first 3 years?
Great question. I think it's not. I think some people get challenged that they don't think that they could work with a financial advising team. Now, some they do have minimums. We don't, but I think if a person is interested in, being creating something or starting on a nice financial plan, if you will. I think they should reach out to a person that's in the industry. I know you can get a ton of information on the internet today and on YouTube and all of these other things. I've seen them. I think a lot of that is a lot of get rich stuff. Like, buy this and go up 1,000. I know I bragged about my stock earlier, but that's not every day. I
No,
feel
they're really pushing that.
that's
You're
what
not.
they
That's
push.
just.
Yeah,
That's
and
something
then,
that happened to a client. You're not out here. That's the only ad you're running on Facebook. You don't even run ads, and
right.
so
So I think people get caught in that. They think that that's the way it has to go, but it's really not. I think if you can get on a plan and a little bit at a time. Well, we're not market timers. I am no way, shape, or form can tell you where the market's going to be tomorrow. I have an idea, but I'm about time in the market. And what I've seen now in 25 years of people investing from 100 a month to 500 a month, it's massive in 20 years. It makes significant difference in your retirement planning side. So, I would encourage anybody is to, talk to a professional, obviously understand the fees and the costs and everything that's going to be associated with it. But, I like nice stuff, and I buy things that are value to me. So I think to me, putting a little piece that, can give you and your family some value adds,
yeah.
the way to go. So even as a single business owner, you are
solo 401k.
solo 401k, you're eligible for those things. There's things you could pay a spouse, you could pay a child. It's those kind of things that
The strategies to reduce
thank you.
taxable income to increase that wealth over time.
Creates the wealth, right?
Yep.
So you do a right tax strategy, we create more wealth, do certain things. So I think it's that sort of stuff that I see people not taking advantage of what's out there.
Not taking advantage of what's out there. I like that.
Stuff like that.
I
Yeah.
like that.
Yeah. Because there's a lot of things that, you can do, and it does not take a lot. It's a couple of commitments, but it's a long-term commitment with just a little bit of things that can really make major difference in someone's life.
Absolutely. So I want to talk about maybe exit strategies as far as certain products, planning for those, maybe when you're getting into maybe an individual stock or something like that, or you're building up to retirement, right? You're in higher risk, larger growth opportunities early on. How do you manage that timeline and that plan? How do you ensure that it goes as good as it can? And what are some of the things or ways you've seen maybe in others or that went wrong?
So a lot of the planning, we tend to take a backwards approach and work our way back. Which what I mean by that is
Reverse engineer.
Reverse engineer. Thank you. We look at what you need. So how much that is a month. Some people need 5,000 a month. Some people need 10. Fine. Doesn't matter to us. We can work through the taxes that would potentially be taken off any of those portfolios. If we need to plan for taxes, we do. We look at how much a person's going to need to live on. We then back up any pensions, any social securities. So the reason I'm telling you that is because then that helps drive the strategy of where we're putting the assets,
Money.
putting the money.
Okay.
I could have a client who has $10 million with me and does not need to take the risk of the stock market. I could have a $10 million portfolio with zero stock exposure because the person doesn't need to take the risk.
Yeah.
So, that's what helps to me is what does a family, what does this business owner, what does this client need back in that, and that helps us drive the strategy. We have custom made in-house built models. I added a team member about 2 years ago, and his primary role is watching these models like they're a child, and he's adjusting them, and he's running back tests, stress tests, everything else that's doing. And so as a person evolves into their life and they're getting closer to retirement, we're then adjusting the risk at that point. That's when we become risk managers. Right now, for someone like yourself, Matthew, we could take some risk. You're working, you got a
Yeah.
career, you're building up. So, I mean, I'm not saying stuff that's going to blow up tomorrow and go bankrupt, right? I mean, some can, but it's going to be a small piece for you.
Yeah.
So if you got income, we can take a little bit. A lot of our business is risk management, is I
Absolutely.
would say.
Have you ever read the 7 Habits of Highly Effective People?
Long time ago.
You know what principle you just talked about and obviously stuck? Begin with the end in mind.
Yeah, I remember that now.
Look at you.
Uh-huh.
Despite all that drinking, you still got some memory, huh, boy?
Yes, indeed. Well, it's like second nature to me now.
Yeah, I
Money,
know.
making money work for people and seeing the difference it can do. Again, it can be. I see people do bad stuff with it too, right?
Yeah.
I mean,
Give us that. Give us 2 highlights. I want to see maybe one of the proudest moments you ever had as a financial advisor, and it could have been from something very small or humble to a
sure.
large success, kind of similar to what you mentioned earlier. And then I want to hear, about
Maybe some negative.
some negatives. Yeah.
I'll start with the negative just because it's top of mind right now. But I've seen multiple people who number of things, either inherited funds, retirement as well, and completely liquidated the portfolios because they thought they needed to take the money. And then they had massive, massive tax bills. That's the biggest negatives I see is people making a financial decision, normally withdrawals, like I need this or I need something, and not understanding what those long-term consequences are. And somebody might say, hey, well, I need $100,000 because I'm buying a camp. Of course, today you could spend $100,000 on a vehicle. Doesn't matter what you spend it on. Let's just make a strategy to do it. Because to clear $100,000 out of any portfolio, we probably got to take out 135, maybe 140. So you just send a $40,000 check to Washington, D.C., no telling where that's going, right, just to clear this $100,000. Or could I just send you $1,000 a month and still get what you need? Now I've got $140,000
You're
still
keeping
working.
that principle working.
The tax money is now working.
Yeah.
So I think, bad decisions I would say this, it was a want, not a need. I wanted this, I want that, I have to have that. It wasn't a necessity situation. That's where I've seen a lot of people make mistakes.
Okay.
So I think that's a big thing. Positive wise, though,
Yeah.
I think
Talk about some of your proudest moments.
my proudest moment, and I've had a few happen this year, is I think it's the time principle, man. It's the fact that clients can not have to worry about the news when you're working with me. I take care. I'll let me worry. Let me stay up at night. So I'm giving you your freedom to go live your life and enjoy what kind of what you worked for here. So I mean, I think it's given the time. I think it's great financial decisions that I help and consult a client to do, and then you see that in work because you got somebody who was waiting to retire at 65, but we get them out at 60 or 62. And then
Yeah.
bringing in you for that example. I know we saved somebody $1,800 a month. I remember.
Oh yeah.
That
Yeah,
gentleman
it was
got
incredible.
sick,
Yeah.
and I mean, he like we gave him life and we gave him time.
Absolutely.
I think that's where it's at. Sure, I got awesome stories. I mentioned a stock that's 11 worth 90. I've seen bigger numbers with that because you just the right research at the right time and it just worked out.
Yeah.
And then now you got to start looking at other things, and AI is pushing heavy. There's a lot of just over the top returns lately. Sometimes people go chase that, and
Yeah.
you hit a buy at the top and sell at the bottom. That's reality. That
Yeah.
is reality. You see the overall return of the market. is like 8 to 9 on the S&P, but when you look at some of the numbers, that's the overall return for the investor. It's in the threes because they emotionally come into play, worry about the news, hear something, talk to somebody at wherever, they waiting in line at Starbucks and hear somebody and they getting financial advice and they go make a decision. And a lot of it is quick decisions. I mean, everybody, don't get me wrong. I mean, hey, it's nothing like, everybody would love some quick money, right? I mean,
Yeah.
hey, why not? I mean, if you can, but 9 out of 10, it doesn't work.
It doesn't work, and it doesn't last. It doesn't
You're
last
right.
because
That's
you didn't practice the principles that requires you to keep it.
Mm-hmm.
Right? The same principles to earn it are also the same principles that allow you to keep it. And when that doesn't happen, you get that money quick. You spend it quick. You make poor decisions.
That's true too.
Speaking of some poor decisions, talk about some tax deductions that maybe people miss based on poor decisions. I know you're not a certified CPA or anything, but I know you know a little bit about the subject.
Definitely.
Why don't you just talk about?
Yeah, I think I think there's things individually. Number one is a lot of people miss out if you're eligible. Is the Roth IRA? I think that is one of the best planning tools. You also have what's called and do the backdoor Roth. It's called where you can make a non-deductible traditional IRA contribution and then convert that into a Roth. And what we're doing there with that strategy. And I bring that up because that's probably the number one. We don't get enough clients to take advantage, or enough people who are investing to take advantage of that Roth, because that's all tax-free growth and that's tax-free distributions at age 59 and a half or 60 or whatever year that is where you retire. And the significance of that is huge, to not have a tax bill in retirement.
Yes.
Okay, then I mentioned things like
And that product allows you to get around the income limitations, correct?
Well, yeah, do the backdoor Roth purge that get around the income, exactly.
Because the Roth has a set, you can contribute, reduce your taxable income, or pay taxes on it up front, grow tax-free, spend tax-free, but you have to be underneath
a certain income. Exactly. There's an income limit that the IRS puts out. It does raise up annually. It goes higher and higher. But if you make past that threshold, that's when we can come in. There are some other ruling in that. You got to watch what the person does inside their employer-based plans. But again, that's what we're trained to do. That's what we're up to date. By January, we'll be updated on all of 2026 rule changes and those sort of things. I think as well. I think a lot of people think you need $1 million to get started, and you don't. Let's make a plan to get you to $1 million. And that's what I think. That's another. They go chase some major returns. Again, we all won't retire tomorrow.
I bet you see that a lot when you see employees transitioning from one company to another, and they may have built up. Maybe they were at a company 5, 10, 15 years, and they've got maybe 100, 200,000, 150,000. I know you see that a lot in your industry where they think either they don't think to put it with somebody to continue to grow it, or they think they need to, I'm left that company. It's my money. Let me take it out, and it creates that poor tax decision.
That's that, and as you mentioned, or leaving it there, because then now you're in an unmanaged portfolio.
Yeah.
Nobody in a 401k is looking out for you. That a team like ours,
And so if you got something that's left behind, it's not left behind forever. It's just sitting stagnant. You have the opportunity, no matter if it's $1 million or $100,000.
That's correct.
To put it with somebody who can manage that, or manage those assets, and put together the right mix based on where you're at.
Where you're at, where you're trying to get to. What's the goal? It starts with goals. We do a lot of the assessments on a person. Looks at them. Net worth and what they're making, how much they want to save, how old, so many factors go into that. But then now you've got a team in place, and I built a team out now. I have a team of 4. And so we now can work for you to reach those goals that, our clients are looking for.
Absolutely.
So that's what it's all. It's all, objective based type, as I mentioned. Then you can start building out the portfolio and stuff from there.
Absolutely. All right, Troy. So getting to things. I know we're getting close to wrapping this up. I want to talk about the impact that you would like to make on our audience. Something from your story, your journey. a key takeaway that you want to leave the people here with today?
Definitely, man. In talking about our audience here today, I feel like my message to you would be is dream big and understand that I feel like we are in the best place in our lives, meaning this country, as crazy as it is, we're still in an awesome spot to make any dream come true. And there's a lot of noise out there, and there's a lot of media and a lot of news, and a lot of it's negative. There's some great things that are out there, and I'm telling you, you have to give it time. You cannot expect to come out of college and all of a sudden be a millionaire unless maybe one of these obviously high paid athletes today,
Yeah.
and I'm not saying that's not unachievable, but it's not probably the majority of people I worked with reality.
Yeah.
And all of my successful business owners are 25, 30, 40-year people in business. So, I think my message to anyone who's getting started in any career, learn it, be a steward of it, where you're constantly having to learn. Take advantage of any sort of conferences, meetings, whatever it may be. Even somebody you don't think you can get something from, you might get one little bitty small snippet of information that is going to make a major impact on you. That's things that I can tell you today that I remember from my first days of starting in this business, which was a valuable lesson, was going out face to face, door to door. You want to get an experience, is pick any street, any neighborhood, any time of day, and go park your vehicle and get out and go walk and knock on somebody's door. It is the most humbling and challenging experience, but extremely rewarding. I have multiple clients today that started with $5,000 with me who are above a $2 million portfolio from a door knock. I've recently been able to make a transition in my business where I transferred onto the independent platform of Raymond James Financial Services. It's been an incredible move for me. I'm very happy to be partnered with them. And going into this transition was a lot easier than the last one, leaving from the employee side. But it made me a proud moment for a minute, because I said, it all started with one day and one door. I can still remember the first day. I walked up to this lady's house. She answered the phone, and I went, blah, 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 and I even know what I said, and I walked away, and I didn't even ask her name. I didn't even give her my name or my phone number. All I said was, "Hell, I'm here," and I left, and but I still remember it, and I got better and better and better. And I just had an incredible opportunity to make a move recently. I'm proud to be a business owner in this city, in this town, in this state, in this country, and it started from one door.
I love
It's
that. I
just been my
love that.
path.
Yep. Just get started.
Just got to get started.
Hey, you ain't
Yeah,
got to do it all today. Just do something,
that's
right?
exactly right.
What are some of the projects that you're working on right now? What's something that you have going on? I know you mentioned the recent move to Raymond James, to
Yeah,
that platform as an independent wealth advisor. What else is going on with you
definitely. I
today?
had a lot of motivation with that. Number one was being at a place to help my clients better, add in more certain things, and what I've been in process of working on is how to help people in my industry go from that employee challenge to an entrepreneur. And we've built out a few playbooks. I've built out a few, just steps to take, things to do prior, things to do after, and I would love to help more financial advisors see the light that I've seen.
That's phenomenal. So if you're looking to take the leap of faith from an employee-based firm to that independent side of things, how can they get in contact with you? How can they reach you? Give us the information on that.
Perfect. Yeah, thank you. So, my website is www.aucoinwm.com. I can be reached through that on the contact page at any time with that. Email troy@aucoinwm.com. And we've got a full-blown website. Aucoin Wealth Management is my firm. You can see all my team members there. We've got bios, write-ups, and there's contact cards exactly from there. I am on LinkedIn and stuff as well. So I can be reached at any of that time. And if I can help, I'm definitely at a point in my life to want to try to give back. And I give back to this community. That's one thing I judge myself on the success I've had, is being able to give back. We support some major organizations. Bella Bowman Foundation, Blue Ribbon Soiree is another one that my wife and I have dear to our heart in helping out in our industry. And I do a few other things, out there, and and stuff like that. Just go above and beyond. Cook a jambalaya, drop it off to somebody, and that's fun.
Yeah.
You take a passion that you like cooking, and you go do it and help somebody out with it. I've had a passion to want to help people. I've always been in the financial. I've always had an interest in the financial industry. I've always had an interest in Wall Street, you name it. Watched all the movies. There's one show, 1987, Michael J. Fox, Secret of My Success. He's a Kansas farm guy, goes to New York, makes it in this big company, and eventually takes it over. Awesome show, 1987 movies. They don't make any of them like it anymore, but I've always remembered that show.
Okay. All right. We'll have to take a look at that. And lastly, so the name of our podcast, or my podcast, is For Profit. It was kind of come up as like a silly joke with my business partner, but there's a lot of different meanings of profit for people. We don't think of it solely in the sense of the business term profit, what's left after, all operating expenses. Could you give us a sum up of what profit means for you in your life and in your industry?
You think about profit, right? It's what's left and it's extra. And it's all your hard work. If you want to put a dollar value on it, certainly you can come up with that number. Every company we invest in, the first question is, how much are they profit, right? And that is related on the money side. And yes, that's always a number that is monitored when I'm looking at my finances on a weekly, daily, sometimes basis, running my company, looking at me. I think if you take profit and you look at the fact that it's extra and it's the result of hard work, could you maybe think that we relate that to the extra things that we do, extra things we do in life, the extra things we can do for other people? And I think that if you have if you're in a situation that you give it your best in what you do, you're going to have profit at the end. Now, that profit could be more time. That profit could be, money. Let's face it, I like nice stuff, things like that. And you want to work hard to be able to get to that point. But, if you look at what doing what's right, going back to what I started with of doing what's right and giving it your best, I think profit's going to be the last thing on your mind.
Love it. Love it. Ladies and gentlemen, that's a wrap.
Thank you for having me.
Absolutely. Thank you for coming,
Thank
Troy.
you. All right,
Appreciate
Matt.
You, brother.
Appreciate you, man.
All right.
Good time.